Thanks for checking out this week's FinPrep Trading and Investment video newsletter. Let's go ahead and look at the year-to-date scoreboard, absent a pop-up ad, of course. Stocks continuing to push ahead with NASDAQ on top of the pile. We'll see that reflected in the chart in that it's basically in trending fashion, having previously consolidated sideways, whereas we kind of have on this SPY and Dow as well is basically a little flirting, yes, with new all-time highs, although off short-term trading ranges. So little breakout, and we've seen that pull in a number of times here. We'll look at bonds, of course, U.S. government bonds pushing ahead slightly in positive territory, so a decent little week here on bonds. Copper, on the other hand, another approximately 6 percentage points swing on copper to the upside this time. We'll see. It's posted to about year and a half new highs. We'll see if they can hold here. Silver, and let's look at the relationship here between silver and gold. Again, approximately 2x outperformance, a very critical juncture, arguably on the ratio chart. We'll take a look at that, but definitely precious metals pushing ahead for the year, silver in particular. And currencies, finally, dollar gaining some strength, in particular against the Japanese yen as well as euro. So SPY here, SPY, again, a little bit of a breakout to new all-time highs, although up against this trend line off our 420 highs, stretching back to 2016 there, proving resistance, and a pretty significant peak here at 228, pulled in for quite some time into about 222 roughly. And that was considerable. So here we are up against it. Once again, we'll see if we get a pullback, particularly as we are on overbought conditions on our fast stochastics on a daily basis as well as weekly basis. So looking at SPY, decent little week. The question is, do we need to pull in once again? On the other hand, NASDAQ, right where we had this nice year and a half long trading range under basically the 120 level, having broke out basically towards the end of the year, pulled into your 50-day moving average, and posted up against this short-term resistance line off a few peaks, which was bullish consolidation, and then now making a run in bullish fashion, in effect in a trend line more or less mirroring that 9 EMA. So we'll look for that potentially for a longer-term view on SPY. On the other hand, the short-term could be in need of a little bit of a breather. Last week we discussed TLT as basing basically at higher lows. So we had this consolidative period, nice little 4-week run, another about 3-week downward corrective period and consolidative up against that about 118 level, and a nice little 2-week pop here, although slightly lower highs, 123 here and approximately 122 capping out so far. So would want to see bullish action for TLT on the upcoming week. Could be problematic in that stochastics are getting close to overbought. On the other hand, on your weekly stochastics, your longer term picture, you're still up against this long-term price channel support, closed above your long-term 200-week moving average, and it looks like your weekly MACD may potentially want to cross over in bullish fashion, but it needs some momentum in order to do so, kind of flatlining that somewhat there. Dollar index, a little bit harder picture to call, finally took a break off its downward corrective period, off its breakout to new, about year and a half high by recollection. So we'll get a cleaner view on the euro chart. A little bit harder to call though, and overbought though on your fast daily stochastics. Gold did get its breakout out of its downward price channel, which silver and the gold miners had long since taken out. The positive piece here was that it took it out not only on Monday, came in, retested it on Friday, low of day, more or less on your 9 EMA, as well as your trendline support, and posted and closed near high of day. So strong action out of gold, which is finally, again, catching up and mirroring the prior action which we had in silver. As you see here, silver closing right below your 200-day moving average, overbought on the other hand, with your 200-week moving average bearing down as potential resistance on top. So we'll see if this beginning of year rally is simply just that, or will it become anything more substantial. Gold junior miners, another terrific week, approximately by recollection 7% up day here on Monday as it took out your 200-day moving average, came in, and then again similarly retest your 9 EMA slash 200 EMA, and a decent little showing closing near high of day on Friday. So great stuff out of the gold miners so far last week. Exaggerated picture here on the JJC when you compare it relative to the futures chart, but a slight breakout to new about year and a half highs here. So finally did take it that level out of 3150 approximately. We'll see if it holds or if it's going to again pull back in on us again prior to really kind of decisively taking out that 3150, but decent week nonetheless on copper. Taking a look back at currencies, let's start with euro this time. Euro mirroring dollar index again, finally, instead of chipping away at that short-term trend line, did pull in a bit, taking a bit of a breather, correcting somewhat instead of just rallying in choppy, although consistent fashion, oversold. So looking at a hold, this 50 DMA as being critical. Hard to say where it will end up, but euro definitely correcting here a bit, but looking for potential hold of the 50-day. Finally, yen here on the chart. Basically, similarly, yen pulling in, holding your 20-day moving average. What would be critical, though, once again, is for it to hold that short-term trend line, which we've held on numerous other occasions since the beginning of 2017 here as well. But it would be critical to hold the 50-day moving average. So assuming those two conditions hold, if we continue to sell off, the question here is, clock's ticking on a beginning of year rally. One may be forgiven for viewing this as a potential bear flag. So we had this drastic kind of price, I don't want to say collapse is a bit exaggerated, but it was very brutal sell-off along with gold as it consolidated in through summer. And we had that end of year, basically reversal of that, much of that gain. So question here is, how does it deal with the 87 level, your 20-week moving average, as that's bearing down upon us here? So decent little chart out of the FXY yen. Question here, obviously if this is simply a bear flag, how does it hold up against the 81 lows? Does it retest 78? Or can it still continue to make further gains? Finally, and on the ratio chart. So we're looking at the gold and silver ratio chart. Recall, in general, one would say that we would want to see silver outperform gold to the upside to kind of as a confirmation to a bullish overall stance within the precious metals. Strictly speaking, if we draw a trend line here on the ratio chart off these lows, which little dips below your 200-week moving average, looks like we've set up for a breakout. We have broken down out of that positively, i.e. silver outperforming gold to the upside or downside. But basically, it looks like, especially with the take out of that 68, we could get some exaggerated outperformance on silver here, which would overall bear well for the precious metals beginning of year rally in terms of buying it a bit additional time, arguably. So we'll keep a definite eye on how does silver perform relative to gold, and needless to say, the miners as well. So hope you find this helpful, guys. Take care.